Good morning, traders. This is Brad Matheny again. I thought I'd take a minute or two to highlight the longer term setup on the SPY related to Fibonacci Price Theory and to help you understand where we are in market trend with regard to overall market direction. So now to highlight where I'm at, my longer term models are still bullish. Okay, so we have a moderately strong bullish trend that initiated weekly, which I'm right here. We're on a weekly chart. My models have been long since roughly over here. So they are continuing to stay long through this entire time frame. Although we are starting to get some weakness, we are starting to see some downward trending in certain sectors. For example, the financial sector and consumer staples have started to move down. I update these every weekend, and I try to make them available to my followers and subscribers. But the long and short of it is we are in a very interesting time frame. Now, I've drawn this zigzag indicator and I've set it up very short term on this weekly basis so you can see what's going on. I'm going to come in here and turn off the percentage numbers, and that gives us a pretty solid price bar. So the way you operate or use Fibonacci price theory and the way it works is that I'll highlight it here. Price is always seeking new highs or new lows. Always. So understand that that means that we are always in the process of trying to find a new high or a new low as price rotates around. So I want you to keep this in mind as we go forward. And I'm going to draw some things on the chart here to help you understand. So when you're looking at the chart, the very first thing you want to do, whether you're long term way back over here or not, is you want to look at previous highs and lows. So we have an ultimate low, which is an extreme low way back over here, right? That's our extreme low. We have an extreme high way up here. Okay. Now, when we look at this, we have to start looking at intermediate highs and lows because this is our big broad range, and this is a huge range, 2200 to 4820 roughly. And this is a weekly chart. So we have to start looking at more intermediate highs and lows. So there's a difference between unique highs and lows and standout highs and lows. A unique low is a low that's been set up that has not been reached in the last 20 or 25 days. Now you can see, or 20 to 25 bars. You can see as we come down here, here's a unique low, here's a unique low, here's a unique low, here's a unique low, and then eventually we get this one that sets up as the base. Every one of these gets breached to the downside, which means that they confirm the downward trending that takes place as we move lower. So we've got essentially new low here, broken, new low here, broken, new low here, broken, new low here, not broken. This now becomes our more immediate standout low. And given this rotation right here, assuming that we have more than 20 to 25 bars over here, this one would now become our next unique low right over here. Now I'd have to do a quick count to make sure we have enough bars. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Nope, this is more of a standout high. So I'll make this kind of a purple color and a smaller line. So this is a standout low. Okay, this is a standout low as well. You can see them. We have one here, and what I'm doing is I'm picking what are called standout levels or unique levels, telling me where price is going to potentially try to find support or resistance. Now we have a little standout low right over here. Might as well highlight it so you can see a low in this scenario is basically a pivot. So a fractal type pivot. So you can see here, we had this low here, and then a lower low, and then a higher low, then a higher low. That sets up a standout low. Pivot highs are like, for example, right here. Then we come up and set one up here. Then we set one not quite here, although the fractal, the zigzag caught it because we don't have a lower high on this side. So we come up here, we don't have a lower high. We do have a lower high here. So this becomes our new unique high. I'm going to make this a 4, make this green, make this green. So what I've done now, ladies and gentlemen, is I've mapped out the pivot highs and lows. Now, every single one of these moving back through time provides some reference. So, you know, we could reference off of this coming right across here and say, okay, this is, and I'll make this light, 2 points. This is a potential support resistance channel. This is a potential support resistance channel. We have another area right here that aligns with these other areas right across here and across this low. So you can see how this area acted as support, this area rejected it, this area acted as resistance. Sorry, this was resistance. This area acted as temporary resistance, broke above it. Now we came down and bounced off support. So every fractal high and low or Fibonacci standout or unique high or low provides us some reference to where we're at in the market. So we have this ultimate high, we have this new ultimate high that is lower, we have this ultimate low, which is higher than this ultimate low. Now we're in this range here, and we're looking for an established rotation. And what I think is going to happen here, we're in a solid downtrend. So we come back over here, let's take a look. This is weekly, remember, so I'm going to come in here, I'm going to look for, obviously we have a potential standout low right here. Well, it is a standout low that got broken. I'm going to draw this in purple. And we have potentially one here. Let me come check. It all depends on where the low is. Low is 433.3289. Low is 4343. So that's another standout low. And that will give us confirmation across the same level that we had dual support right here. We broke below it, we confirmed, we are slightly rejecting here. So let me carry this forward, and I want you to understand that we are getting slight rejection here. And what that means is that we could see upward trending, we could see a move potentially back up to the upside here, maybe rolling back down. We will see. And that would play into a shifting asset class where global markets are trying to move into US dollar assets, trying to avoid risk, and the US dollar has been strengthening. We could see this actually hold up over here. But ultimately, I kind of believe that we are in this downward cycle trend, A, B, C, D, and then we're looking for an E move, possibly down into this area, maybe down into this area, trying to find some support. So we've got this holdout. Now we run into a standout high right here, and I'll do this in a lighter green color. I'll do it in blue color. Actually, it's too close. We have another blue out there. So I'll do this in a lighter green. And where we're at right now, ladies and gentlemen, on this weekly chart is that we must get above this level in order to try to rally higher. And let me see here, change this to dash. And or we must get below this level in order to move downward. So this is really our trigger level, not the blue one, the purple one. This is really our trigger level, and this is our trigger level on a weekly basis. So we've dissected the entire market. We've got very strong support here, which could provide a deep potential support level right across here. We're getting a bit of a bounce. We've not quite rejected yet, okay? We're close to rejection. We would have to get above the 43.32. Close is 43.39. So we have a bit of consolidation here. It'll be very important to see what happens on Friday, today, coming up. If we roll downward, we're going to see a very deep rejection. So really where we're at with this, ladies and gentlemen, is that we have a solid setup. We must get above this level. Make this 4, make this 4. These are our conditions. We are in a breach downward. So what this means, ladies and gentlemen, is that we are in a downward trend already. Okay, so understand that we are in a downward base trend. We have broken this low right here. This gives us a downward trend. We do not have any reason right now to be bullish other than the fact that we are holding up off of these lows. Okay, this is a weekly breakdown. This changes our longer term direction to bearish trending on this breakdown bar right here. I'll draw a vertical line on it so you can see. And this tells us now that we have a breakdown to the downside right there on the next bar. We would be getting short and we would be expecting the market to continue downward. Now, price is always seeking new highs or new lows. It seeked out a new low right here. So this was a new low. And at this point, we are expecting until we get a new high, which has got to get above this level, until we get or sets up a new high over here and breaks above it, we are expecting it to move downward. So understand that we're basically expecting this type of a trend, and alternately, we could see possibly this type of a trend, which would be a broader rotation, still below the breakout level, setting up a new high and giving us potentially a new standout or ultimate high right here, depending on how much time it takes to be able to revert back to the downside. So we are in a bearish trend right now. Okay, we do have the ultimate high up here, which has been reverted down to this new lower level. We have an ultimate low right here, which will eventually maybe set up an ultimate low over here somewhere, which will tighten up our ultimate levels. And this is how Fibonacci price theory works. So now we go down to a daily chart. Remember, all of these analysis on intervals, on the weekly interval, still plays out to the daily. So now let's come in here and let's take a look at where we have some intermediate daily setup. So this trend is still valid. This trend provides a secondary high right here. So here is potentially, and I'll do these a little different. I'll do these as solid, 2 points, and light green. And I'm going to make it a different color. Okay, I'll do this as light purple. So there's a standout high coming down. We have potentially a standout high right here. It's already confirmed. We see that with the pullback. So that gives us a solid definition. Let me move this out of the way. We have the low here. We come back here. We have the low here, which sets up and gets broken. So this is already confirmed. This is a unique low because it's been more than 25 bars since price has been at this level back over here. This is a unique low, which we've already marked right here. We have another setup of a potential unique low here. We'll let that one go for now. So what this is telling us is that price must get above either this level here, and I will highlight it, and dark green and make it a dash, and or it must get below this level, which again I will set up as a very deep red. And this is our range. Okay, this is the range that price must attempt to get through. We've already gotten kind of above this little standout high, so we've got an intermediate upward trend in a bigger downward trend. So understand the weekly chart is bearish. The daily chart has gone into kind of a bullish trending here. So this is the break of this bar right here on confirmation gives us an intermediate bullish trend. Okay, but we are rejecting over here this price trend. And if we get below this level again, which is right here, we're going to move back into a downward cycle trend. which is going to be very clear to try to come back down and take out this low. Remember, price must always seek new highs and new lows. So if we can't get above this high, we're going to come down and try to take out this low. That's the way it works. Or establish a new low somewhere over here and then roll around and then try to take out either this high or whatever the new low is over here. That's the basis of Fibonacci price theory. So you can see as we get above here, here's a new high. It's kind of interesting to look at previous. So I'll make this a 2 point, make this a light pink, solid. Understand that here's a previous high, here's a high coming down here, and we get this break. Okay, good. It's taking out it's making new highs. Great. Okay, intermediate upside trend. We might have a couple of days of follow through. You can trade this to the upside, and you might be able to get a little bit of a move. I mean, this was a solid maybe 1, maybe 2% move. Okay, but as soon as it rejects and fails, like we're seeing right here, as soon as it starts to reject right across here and moves back down, now this support level becomes resistance. We're now failing to establish new higher highs. We need to watch it to take out lower lows. Well, did it come down and take out these lows? No, not yet. It rolled over, tried to set up a high, rallied up a little bit, rejected, came back down. So at this point, we're bearish again. Remember, we were bearish at this point on the weekly chart. And now we start to come down. We take out these lows. These are standout lows. And this is on daily. So these lows right here are basically our trigger to say, hey, get short. This is our new short trigger. We're taking out these lows, get short. And now we have a sell-off all the way down to these lows of about 5%. Now, over the course of maybe 10 days. Okay? This is how it works. So on a daily basis, we are intermediate uptrend, working on rejection. We shouldn't chase this right now unless we see some intraday triggers that provide some clear setups. And again, you can go all the way down to 30-minute and you can do the exact same thing. Okay? You come in here and we can take a look at highest high. So we have our very clear ultimate high right over here, which is a green trigger. We have a very clear ultimate low right here. This is the most recent ultimate low. And so now those become our broad range. This is where we've got to get above and below. Now we have a standout high here, comes all the way across. We have another standout high here, which was breached. We have another standout here, standout high here, which hasn't been breached. This one breached, rolled over, and then rejected. See, this is the rejection here. We have a standout low right here, which was breached to the downside. And I'm looking for another standout. We have another one just barely right here, which got breached to the downside. So on this 30-minute chart, where are we? We've got, this is actually an ultimate because it's more than 25 bars roughly since we've seen this. And again, that's a rough number. That's 15 to 25 bars. So you want to look at it as how much time did it take to actually make this? On a 30-minute basis, this was a pretty solid, unique high. So at this point, we are in a downtrend. We've got this confirmation here. We're in a downtrend. On an intermediate downtrend, we would have to get beyond this level here, and I'm running out of time. We would have to get below this level here to take out a new low, or above this level here to take out a new high, or establish new levels in here to show that we are able to set up a new high or new low. But remember, price is always seeking new highs and new lows, and you can use this in any time frame, in any interval, on any chart to be able to trade effectively and be on the right side of trend. Okay, learn more, follow me, and let's make some money, guys. Talk to you later.